So the Bank of England have put their base rate up again. Does this mean we are heading for a housing market crash in the UK? Now, it wasn't much of a shock for most when the Bank of England yesterday decided to put their base rate up from 0.5% to 0.25%, an increase of 0.25%. This is because in the last couple of months, inflation in the UK has gone absolutely astronomical. You could say inflation has literally gone to the moon. Now, of course, over the last couple of years, a lot of things have happened in the Western world that have caused inflation to go up, not just in the UK, but also in the US as well, who incidentally actually also increased their interest rates earlier on in the week. So inflation was on the rise at the beginning of 2022 anyway, but of course, recently we've had issues with our supply chains for fuels such as natural gas and oil because of the Russian invasion of the Ukraine. Now, there aren't too many short-term fixes for the supply chain issues, but the one thing that the Bank of England can do is up their interest rates to try and combat inflation here in the UK. If you've gone back a couple of months, I don't think there were too many people predicting that we were going to get 3 rate increases on the trot. But if you go back 24 hours, I don't think there were too many people that were actually not predicting that the Bank of England were going to push their base rate up yesterday, but it was just by how much. In fact, out of the 9 people that are on the Monetary Policy Committee, which is the group of people that are in charge of making the decision on whether the Bank of England put their base rate up, down, or keep it the same, 8 out of the 9 actually voted for this increase. So it was a pretty popular decision. Now, of course, the price of living over the last couple of months has gone up massively. You only need to drive down a main road and have a look at some of the prices of fuel at the moment to see that we're in a little bit of trouble in the UK when it comes to the cost of living. Now, I've spoken to a few of my clients actually recently, and some of them have been quite shocked by the fact that the Bank of England want to put their base rate up, because of course, this will have a knock-on effect to mortgage rates, and that is an additional household expenditure. But putting the Bank of England base rate up is a traditional way that the Western world have combated inflation, and you might say at the moment it's one of the only short-term fixes that we've got to try and stop this increase, which some people are predicting could get above 9% this year. Now, bearing in mind that the target for inflation here in the UK is just 2%, it hitting 9% could be almost catastrophic. But as I said before, this Bank of England base rate increase is definitely going to have a knock-on effect when it comes to mortgage rates. We've already seen lenders put their standard variable rates up within 24 hours of the announcement, and this is going to start having a knock-on effect when it comes to fixed rate products that we're expecting the lenders to put out over the next few weeks. We've already seen lenders increase their rates over the last month or so as a result of the last Bank of England base rate rise. So what kind of effect is this going to now have on the UK housing market as a result? Now, if you check out my video that I did last month after the Bank of England increased their base rate, where I discussed why the Russian invasion of the Ukraine actually had this knock-on effect to why the Bank of England put their base rate up, you would have seen that I've discussed how increases in the interest rates here in the UK for mortgages will have a knock-on effect to affordability for first-time buyers and house movers actually being able to afford the mortgages that they would have been accepted for just a couple of months ago, and this will obviously lead to a decrease in the number of buyers in the market. This decrease in buyers means competition for properties is less, although we still have a supply and demand deficit here in the UK, but it just means the competition is a little bit lower, which means effectively for every property that's on the market, there are slightly fewer buyers that are going to be interested and competition will be slightly less. And this will probably, stop the growth that we've seen in the property market here in the UK over the last year or so. So what about the latest increase? Is it going to be enough to create a real issue with our housing market that's going to lead to a crash? Well, I don't think so. If I'm completely honest, I think that all of the commentary that we're seeing at the moment about the potential for a housing crash is a little bit far-fetched. Now, there's 2 reasons for this, okay? So the first is that, as I mentioned earlier on, we still do have a supply and demand deficit here in the UK where there is basically not enough properties that are on the market at the moment for the number of buyers that are actually looking to buy. So when you've got more buyers than you have stock, of course, that creates a supply and demand deficit, which means property prices should go up. Now, if we go back about 12 to 13 years when we had the credit crunch, the reason why we had a bit of a property market crash at that point was not because the supply and demand went down, it was actually because of a lack of credit, hence the term credit crunch. If people couldn't borrow money, then they couldn't go and buy houses. Now, one of the key differences between now and then is that our lending market is insanely liquid. What I mean by that is there's a lot of money available to lend. Now, some of the clever among you might be thinking, okay, Sam, there might be some money to lend, but if interest rates are going up, few people are going to be able to access that, and is that going to have a knock-on effect? But it's not a big enough effect that's going to cause a crash. Yes, there are going to be quite a few people in the UK at the moment, as a result of these rate increases, that would have been able to afford a mortgage of, say, 200,000 last month, that now won't be eligible for that amount, which means they will either decide not to move or they'll go for something a little bit cheaper. Now, we do have to factor in, of course, that with inflation rising, the cost of living is also going up, which actually means as well, there might be fewer people that are looking to move anyway. We have also seen that transaction numbers have been steadily decreasing over the last couple of months. So the proof genuinely is in the pudding, and we are seeing that the increase in interest rates, the increase in the price of goods, and the lower surplus income that's available for most people is having a knock-on effect on them actually deciding to move home. All of these things mean we are likely to see either a slowdown in the rise of property prices over the next couple of months, or a stagnation where it doesn't go up or down. For property prices to go down en masse, we're going to have to see a really decent swing in the supply and demand issues that we currently have, and I think that interest rates are going to have to go up significantly more for that to actually happen. I guess the next few months are going to be really telling as to whether I'm right with this prediction, but history tells us that the conditions currently are not those that are going to cause a massive, huge crash in the UK housing market. But for those of you looking to buy over the next couple of months, it probably is good news, as prices aren't going to rise as much as they have been. They're probably going to stagnate a little bit, and you're probably going to have a little bit less competition for the house of your dreams. So well done you. But anyway, what do I know? I'm interested to know what you guys think. Drop a note in the comments with your predictions for the market over the next couple of months, and I will respond to every single one of them. I really want to get a bit of a conversation going on this. I'm really interested in your opinion on where you think the market is headed. I've given you mine. I don't think it's going to crash. I think it's going to start stagnating. What do you think? I'm really interested to know. Thanks for sticking around to the end of the video, guys. I really appreciate it. It's been a bit of a quick one today because I wanted to update you all really, really quickly. But if you have enjoyed this video, I really, really would appreciate it if you can give it a little thumbs up by liking the video. It basically helps me grow my channel because it sends a message to YouTube that you guys are liking the content and the videos that I'm putting out. You can also consider subscribing to the channel. I put videos like this out on a weekly basis, sometimes as many as 4 times a week. I think I've got over 180 videos now on my channel. So if this has been of interest, hopefully some of the other videos will be of interest as well. And so subscribe and you'll get a notification when I release new ones. Anyway, guys, enjoy your weekend. I'll catch you on the next video.